Hi, this is Ali Salarian from REMAX Success Realty, and today I'm going to discuss with you the latest news came out in the media talking about mortgages and real estate, and as usual by Andrew Chang, the CBC journalist, and the title was about are Canadian mortgage rates about to plummet. So let me start where Andrew ended, which he said at the end, interest rate welcome news. Why is welcome news? Because it's a good news at the end. Why is good news? I'm going to share with you Bank of Canada website. So as you know, and more of the Canadian, everyone in the world were following the interest rate cut in the world. Canada was one of the first country to cut the interest. I mean, Bank of Canada, so they started on June 5th, cutting 25 basis points. Then July 24th, another 25 basis point. And then September, which is this month, 4th, another 25 basis points. So this is total of 75 basis points, where as per April, the last increase was up to 5. That was the overall Bank of Canada rate. That's why we saw some mortgages at the variable rate reached 7% because that's the difference where the margin the bank where they're making the money. So between 5 to 7%, and so between from the 5% or the rate of 5 the decrease now is by 75 means 425. Now let's start from the origin of the problem was back in 2021 when the inflation hit the Canadian very big and caused and the the everything sells very high, starting from grocery, gas, and of course real estate. Everything was skyrocketed. Everyone was aware of that. So an economy like Canada or the governor of Bank in Canada, their job is to keep the inflation low. Unlike other places in the world, they don't care till the inflation goes like a big number, like some countries are 20, 30, 40, even I hear 50. And that kills definitely the country, the affordability of the people. So Bank of Canada started to increase the interest rate somewhere early of 2022 by 25 bips each meeting, where we reached, I think we were at below 125 bips. Then the increase was there till we reached 5%. And the goal is to bring the inflation, the overall inflation, back to 2%. And it worked. So today we're talking about the latest data was released about the inflation in Canada was 2%. Now, when we say inflation of 2% means that's another indicator is GDP as 2%, right? So the other news came here, or the risk was back then, most of the economists they were talking about, including Andrew himself, is if we decrease or cut our rate in Canada and we have a big economic and trade partner like US, south of the border, they didn't cut their rate yet back then, that would cause a big problem. And where the problem comes from, it comes from the weakness or weakening of the Canadian dollar. How? When the Canadian dollar go weak because of the interest rate cut and the American stays higher, that will cause actually more inflation, and it's going to be a trouble in Canada. The reason why, because many big corporation and company, they will keep their money and investment in an economy where interest rate is higher rather than in an economy interest rate is lower. I'm basically talking about here even cash deposit here, where everyone knows that the deposit or GIC rate reached a level of 4.5, 5% sometime in Canadian banks, likewise in US. So that the flow of the cash out of the Canadian economy was the problem. And the biggest concern, as per the report, is the gas itself, the gas price, because it's priced in US dollar, globally. So that was another concern for the Canadian. Now, the problem with increasing interest rate, the biggest problem was out of the CPI, Consumer Price Index, the biggest ticket was the mortgage itself. So if you have a mortgage rate very high and everything came down, then you are not solving the problem. So there is a limit where you reach and you have to bring it down. Anyway, back to the good news. A few weeks ago, the Fed, they did a cut of 50 bips as well. So now Canadian 75, 50 bips were the Fed, so very close. So we didn't get into the weakness of Canadian currency for a long time, which is good news. And I believe there will be another cut from here till the election in US around November. That's going to be 75 bips. It's going to be in line with Canadian. But the Canadian or Bank of Canada is planning to have further one or two more cut by end of this year. That's some economists they agree and disagree with that, but they say first of all the 75 bips is too fast, too big, and some of them they said it has to be otherwise we're going to head into recession. Recession is when the growth of GDP goes below 2 all the way to 0, maybe negative. That is very bad for the economy. That's what happened for in countries like Japan is famous of negative growth for years and years. So we didn't want to head there. So the best thing to keep the GDP between 2 to 3%, meaning inflation between 2 to 3%, and this can be controlled through the interest rate by any central bank in the world, increasing, decreasing, depends on the economy performance and the fundamental and events what's happening in the economy. Now, one of the thing he mentioned in his report as well is 2 years ago we were at 8% inflation and now we are 2. That's a big achievement. The job is done. Now, the again in the report they said there is a Bank of Canada meeting in October 23rd and December 11th, and they are expecting 25 bips each meeting for a cut, and likely to happen at least 25, but at least 25 in my opinion. If 50 happens is even good. What that translate to real estate. Now, everyone knows it's very simple math in Canada, at least in Canadian market, that the real estate so tied with the money comes from the bank. The reason why, because most of the people borrowing, taking their finance or what we call it, the mortgages from the banks, the lenders. So you put a down payment of 5 or 10 or 20%, then you take the rest of the money from the bank, and then you go and purchase a property. Meaning, if there is less money comes from the bank or difficult money comes from the bank, difficult for the buyers to go and buy, and vice versa. So with cheaper money, and that will cause that money going cheap, people borrow more money and go toward real estate. On the top of that, remember, many people they have a money like cash didn't go anywhere. This is what I tell everyone. The cash in Canada didn't go anywhere. The cash is the only thing is parked at the bank at 4.5 and 5% rate, which is very lucrative, doing even better than real estate nowadays. I mean, real estate growth. So once the interest rate goes down, the GIC rate goes down. I know some people they locked it for 1 year, which is good for them. 1 year from let's say 2 months, 4 months, whatever 1 year was. It's 1 year from 2 months from now, which exactly is going to be by let's say June, July next year. They will take their money out and they will see the rate of interest is gone down to almost whatever the rate is going to be back then. So let's say if their target is to bring the rate to 2.5 or 3%, the Bank of Canada target, I'm saying, let's say 2.5. This is what in the report they said by 2025 and 2.5, meaning around that number, 2 to 2.5 is going to be the GIC or deposit rate, which is not that lucrative by the time the real estate is going to be doing better. Any assets, it could be real estate, it could be stocks, it could be crypto. So it's going to be doing better and people taking their money out. So on one hand, you have people taking their cash out of the bank, putting it in assets. On the other hand, you have the banks, lenders are giving money to lend people in order to go and buy. And banks, they are keen toward real estate more than stocks and crypto, especially cryptos in Canada. As I know, banks are not keen to get into that business at all. It's very, very, very hard. But stocks, yes, they do have leverage, but there are rules and regulations. Real estate is what the sweet spot for that. And this is what the Canadian bank do. Now, what we learned from today's episode or the news is what we are waiting for as real estate buyers on the fence, whether first time buyer or repeated buyer or investors. Do we need more than this? More than mathematics and science tell us that property price is going to go up? I know many people that are saying supply is going up, but remember one thing: we have a supply shortage and problem in Canada, right? Again, it depends on the pocket, depends on the product. I cannot compare condos to freeholds, for example. Reason why is, look at the number of the cranes and buildings and developers they are in the process to deliver very soon. So that supply, higher supply. So you see in some type of properties like condo apartments, the supply is going to be high. In other type of the properties like freehold is going to be low. But in one of the episodes previously, I mentioned it might be a really, really good time to get into the condo market, but I'm talking about on the longer run. My expectation is by end of 2025 is going to be the return of the condo, but the detach, bigger detach, freehold is going to be next season, which is the spring season of 2025. By then, we're going to have at least 50 to 75 basis point cut. However, as I'm talking to you right now, I'm recording the below 1 million, which is mostly in the GTA market towns, are already in action, right? So this is the planning, okay? You see the outlooks is going, the interest rate is going down, mean there's going to be a growth in real estate market. And real estate, remember, it's a medium to long run, mostly long run. It's a long term investment. It's not overnight flipping in a couple of months. Those years are gone. Those days going to be in the history. We don't know when those days going to repeat itself. Maybe 15, 20 years from now, but back to normal real estate normal. So if you're planning to buy, I know if your money is locked in GIC with 4 or 5%, there is no point to take it out. It's your decision and your call how to finance to plan your finances. But if your money is flooding here and there and you see cheap money is coming from the bank, remember one thing: real estate is going to grow at very reasonable rate, and this is how, and because interest rate is going down. So, and this is how the outlooks. So back again, once you know what Warren Buffett said, he has two different says or quotation. One says, "You buy when people are selling, you sell when people are buying in mass," of course. Or he said, "Be in fear when the market is greedy, and be greedy when the market is in fear." So you know better than me. That's Ali Salarian from REMAX Success Realty. Happy to help. You find my details and information down this video and have successful real estate. Bye for now.